Hey everyone, welcome back to Corporate Decoder, the place where we uncover what's really going on behind those big corporate numbers. And let me tell you, Fluor's latest report is a bit of a roller coaster. Let's dive into Fluor Corporation's quarterly report for the period ending June 30, 2025. It's a real peek behind the curtain of a major global player in engineered solutions and construction, and there are some big numbers and events to unpack. Hey everyone, if you like breaking down these complex financial documents into plain English, make sure you're subscribed. And of course, join our Discord community linked in the description below for even more insights. Alright, let's get straight to the moneymakers, the financial statements. First up, the statement of operations, which basically shows us how much Fluor earned and spent. Looking at revenue, it's pretty steady for the 3 months ended June 30, 2025 compared to the same period last year. They brought in about $3.98 billion this quarter, just a bit less than the $4.23 billion last year. Over the 6-month period, it's almost exactly the same at around $796 billion. So revenue-wise, things are holding pretty steady. But when we look at the bottom line, net earnings attributable to Fluor, things get really interesting. For the 3 months ending June 30, 2025, they reported a massive profit of $2.46 billion. Compare that to just $169 million last year for the same quarter. That's a huge jump. And for the 6 months, it's also a massive increase from $28 million to over $2.2 billion. So what's driving this giant leap in profits? A big chunk of it comes from something called equity method earnings. It's a way they account for investments in other companies where they have significant influence but don't fully control them. In this case, it's their investment in NuScale Power Corporation. Fluor recognized over $3.2 billion in earnings from NuScale just in this quarter alone. That's a really significant number that, while not direct operating cash, dramatically boosts their reported profit for the period. Now let's check out the balance sheet, which is like a snapshot of what Fluor owns and owes at a specific point in time. One of the most striking changes is in their investments. As of June 30, 2025, their investments jumped to $5.6 billion, up from $2.8 billion at the end of last year. A huge part of this increase is their significant investment in NuScale, which is now valued at $5 billion on their books. Shareholders' equity also grew significantly, mostly due to these investment gains. Common stock outstanding amounts show a decrease from over 162 million shares by June 30, 2025, which is likely due to their share repurchase programs. And next, the statement of cash flows, which tracks the money coming in and going out. Interestingly, their operating cash flow for the first 6 months of 2025 was negative $307 million. This is quite a contrast to the positive $171 million in the same period last year. The report explains that this is partly due to negative impacts from projects at their joint venture in Mexico, where customer payments have slowed, and also increases in working capital on several large projects. On the financing side, they spent a hefty $295 million in the first half of 2025 to repurchase their own stock. This shows they are returning value to shareholders through buybacks. Let's revisit the statement of operations with more detail on their different business segments. Their Urban Solutions segment, which handles projects like infrastructure and life sciences, saw revenue increase to $2.07 billion in the quarter, up from $1.83 billion last year. Segment profit was $29 million, down from $105 million. They attribute this drop to some forecast adjustments for cost growth on infrastructure projects and increased execution on newer life sciences projects. The Energy Solutions segment, involved in things like chemicals and batteries, saw revenue drop in both the quarter and the 6-month period. Revenue was $1.14 billion in the quarter compared to $1.59 billion last year. Segment profit also declined significantly, with a big factor being an arbitration ruling on a project completed back in 2021 in Mexico, which cost them $31 million. Mission Solutions, which likely includes government contracts, saw revenue increase to $762 million in the quarter from $704 million last year. However, segment profit decreased due to a decline in execution on a DoD project and increased legal costs, plus an additional reserve of $28 million related to a long-standing claim. Now we delve into the notes to financial statements for some critical context. The company's investment in NuScale is marked to market, meaning its value is adjusted with the stock price. This is a major driver of their reported profits and losses. For the quarter ending June 30, 2025, the fair value of this investment is listed as $5 billion. This accounts for the massive earnings reported in the statement of operations. On the debt side, they have senior notes. The fair value of their 2028 senior notes was about $505 million, slightly less than their carrying value of $409 million at quarter end. Their 2029 convertible senior notes had a fair value of $565 million, but a carrying value of $755 million. This difference between carrying value and fair value for the convertible notes is important to note. Fluor uses various stock-based compensation approaches. They discussed performance-based awards for executives tied to earnings targets and total shareholder return, with targets usually set in the first quarter. For awards granted under their 2025 performance award plan, the average grant date fair value per share was over $37 for some awards. This part is crucial for understanding potential future impacts. Fluor is involved in significant legal matters. There's a major ongoing lawsuit from Santos Limited against their Australian subsidiary, Fluor Australia. Santos is seeking damages of around 1.47 billion Australian dollars. A referee panel recommended judgment for Santos on some claims, even though Fluor argues a liability cap should apply. The court's decision is still pending and could significantly impact Fluor. There's also the North Texas Tollway Authority case. After a jury verdict of $280 million plus interest and cost, totaling around $4v115 million, Fluor reached a settlement considering expected contributions from subcontractors and insurers. Also, looking at their debt, Fluor has $1.07 billion in total debt as of June 30, 2025, down from $1.1 billion at the end of 2024. This includes their senior notes. They also have a significant credit facility. They have a $2.2 billion credit facility that matures in February 2028. As of June 30, 2025, no borrowings were outstanding under this facility, giving them considerable flexibility. It has covenants like a debt to capitalization ratio limit, which they are well within. Let's check out their backlog, which is a key indicator of future revenue. For the 3 months and 6 months ending June 30, 2025, their total backlog stood at $28.2 billion. This is relatively stable compared to the end of 2024, which urban solutions showing a decrease, while energy and mission solutions also saw declines in new awards. Now, let's talk about what all this means. Fluor's financial performance this quarter is heavily influenced by its investment in NuScale, which delivered a massive boost to reported earnings, thanks to mark-to-market accounting. This is great for reported profits, but also highlights the volatility associated with this investment, which is now a huge part of their balance sheet. On the operational side, things are a bit more mixed. Revenue is holding steady, but the negative operating cash flow in the first half of 2025, particularly due to issues with a joint venture in Mexico and working capital needs, is a concern. This signals that while they're earning on paper, converting those earnings into actual cash is facing some headwinds. The company is actively managing its capital, evident in the significant share repurchases. The legal matters, especially the Santos case in Australia, represent a significant ongoing risk. The outcome is still uncertain and could have a substantial impact if it goes against Fluor. The settlement in the North Texas Tollway case, while costly, brings that matter to a close. Looking ahead, while their backlog is stable, the decrease in new awards in the first half of 2025 suggests a need to ramp up business development efforts. The company's reliance on large long-term projects means that managing costs and ensuring smooth execution, as seen with the Mexico joint venture, is absolutely critical for their financial health. Overall, Fluor is navigating a complex global environment. They have strong operational capabilities and a solid backlog, but they also face project-specific execution challenges and significant legal uncertainties. The performance of their NuScale investment will continue to be a major story for their financials. So what's your take on Fluor's latest quarter? Are the NuScale gains masking operational challenges, or is the company strategically positioned for future growth? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more corporate deep dives. And don't forget to join our Discord community from the link in the description for more exclusive content and discussions. Thanks for watching, and we'll see you in the next one.